the story on the Wall Street Journal. When I ask you what would happen, let's say this is right, the president pulls back, ends the campaign, calls it successful, mission complete, but then leaves the Strait of Hormuz largely closed for everyone else to figure out. What would it mean for this market?
That situation had, obviously, we're asking about it. We're talking about it this morning. The odds of that are rising. That situation would take some of the risk premium out of the market, but it wouldn't fix the physical challenge, right? The physical market is already too tight, and we think it'll just keep getting tighter unless the strait reopens with a U.S. declaration that, the war is over. Without those two going together, you will start running through SPRs and other mitigation, right? So that will, we think, just continue to put upward pressure. But it may not be exactly what it, initially looks like. The real challenge may be on refining margins. And, we've already had record refining margins, but it may still be cheap right now.
Can I ask you about how big the cushion is at the moment? We spoke to SocGen and Michael Hague in the previous hour, and he said the final vessel carrying jet fuel into the UK is going to get there in 48 hours. He was in the UK, he was talking about that market specifically, but we're seeing other problems elsewhere. Given that you've got visibility on this, you can see the tankers literally moving, you can see what's going to arrive and what's not going to arrive over the next several weeks. How big is the cushion right now? When do the shortages start to turn up in some of these bigger markets?
He's correct. A lot of the refined products going into Europe, the last cargoes will be arriving in the next couple of days. Globally for crude oil, a lot of the last cargoes that left before the conflict going to Asia will be arriving in the next really 7 to 10 days. So after that, you will have to start drawing down on stocks that are both onshore and offshore. That is a decent cushion, though. I think you can handle that for another month. OPEC does have a couple 100 million barrels that were outside of the Middle East available for this kind of situation. They're using that already, and that's going to help as well. And then the SPRs around the world will start to be available. So all of these mitigation items will be helpful, but they're not enough. By our balances, you still need something on the order of 4 to 5 million a day of run cuts in the refining sector to rebalance the oil market. But if you do that, you're going to end up even shorter and shorter on those very fuels, like you mentioned, jet fuel being one of the big ones.
How quickly could some of that get restocked, right? You said that if we wait for a month, we might work through the ongoing stores that are available in some of these regions. What about, 3 weeks if, let's say, the conflict ends and the Strait of Hormuz opens up? How fast could production get back into tankers, get back over to these places?
The production that's shut in right now, which we think is around 12 million barrels a day, will be able to come back quickly. The geology and the logistics in the Middle East, anything that's not damaged, and mostly it's not, on the production side, will be able to come back. And really within a couple of weeks, things should start to normalize. There is a lot of oil on tankers right now that could be made available. The minute they can transit Hormuz, they'll do that. So you'll get a nice surge of resupply. But you still have to cover the transit time, right? That's still 4 to 6 weeks, depending on where. So the availability of those cargoes for refiners may be, you could think about it as from the time transit is okay, it could take 4 to 6 more weeks for those barrels to actually start showing. On the refining side, however, we think it could be tougher because we don't know the damage right now. We don't even know how many barrels a day are out. We know it's a lot. We think it's the run cuts from managing storage is probably about 3 million a day globally, mostly in Asia. And then the damages are probably another 3 to 4 million that's out, largely in the Middle East. Those could take quite a bit more time to get back up and running and then deliver those finished fuels versus crude.